Robert Kiyosaki, the acclaimed author of Rich Dad, Poor Dad, has been a source of financial wisdom for decades, guiding many through the complex world of investments and personal finance. Known for his candid and often unconventional advice, he has a track record of making bold predictions with a habit of coming true. Navigating the tides of economic change, a 2024 outlook. As we venture into 2024, the global economic landscape is at a pivotal crossroads reminiscent of critical historical moments. Robert Kiyosaki, a luminary in economic thought, presents a formidable prognosis for the global economy. He envisions a looming downturn, potentially mirroring the severity of the 1930s Great Depression. With a critical eye, Kiyosaki scrutinizes the United States' current economic standing, suggesting that it teeters on the edge of a historical decline reminiscent of the fall of ancient empires like Rome and Greece. This transition era is marked by significant shifts, such as the momentous change in 1964 when U.S. coins altered their composition, symbolizing the broader move from back to fiat currency. Such a shift indicates declining empires, underscoring the need for a deeper grasp of financial literacy and preparedness. This approach aims not to spread fear, but to empower individuals to navigate these turbulent times adeptly. The devaluation of the US dollar since 1971 is a testament to this era of change, signaling a decrease in purchasing power and economic stability. Traditional investment strategies, particularly in bonds and stocks, face scrutiny in this new light. The concept of savers are losers, popularized in influential financial literature, rings more accurate than ever, highlighting the risks inherent in clinging to outdated economic paradigms. Investors in these traditional domains may find themselves in precarious positions, akin to passengers on a metaphorical ship of fools, as they navigate an increasingly unpredictable financial sea. The foresight into economic trends has been crucial in understanding and predicting potential market collapses. The 2008 financial crisis is a stark reminder of the impact of failing to heed such insights, particularly regarding real estate investments. Today, the focus shifts to the broader stock market, particularly the S&P 500. There's a growing concern about a potential downturn that could significantly impact retirement savings and investments. In this evolving scenario, the global economic dynamics play a critical role. Factors like the rise of China, shifting geopolitical tensions, and changes in global economic power are reshaping the landscape. These elements suggest a potential reordering of the global financial hierarchy, with implications far beyond national borders. As the United States grapples with these challenges, the ripple effects are felt worldwide, influencing markets, economies, and investment strategies. As we look ahead, the need for adaptability, informed decision-making, and a proactive approach to financial planning becomes increasingly evident. Preparing for and responding to economic shifts is prudent and essential for financial resilience and growth in a world marked by constant change. The looming shadow of an economic crisis. The impending economic crisis that Kiyosaki warns of is a complex tapestry woven from various global threads. At its core, he sees a combination of international tensions, financial instability, and market volatility leading to a potential downfall. The global economy, already strained by the aftermath of the COVID-19 pandemic, faces further challenges. He points to the war in Gaza and its ripple effects on the economies of Israel and neighboring countries as a case in point. The conflict has devastated local economies and sent shockwaves through the region, impacting energy and financial markets. The Gaza conflict's impact stretches far beyond its immediate vicinity, highlighting the intricate interdependence of global economies. Countries like Egypt, Jordan, and Lebanon, already facing their economic hurdles, find themselves further strained by the regional instability. This ripple effect of regional conflicts underscores the vulnerability of the global economic environment and the ease at which local issues can escalate into broader economic challenges. Beyond regional turmoil, the broader implications of the Russian-Ukraine war cast a long shadow. This conflict exacerbates existing fuel and food shortages, contributing significantly to the post-pandemic inflation spike witnessed across the globe. The expansive government stimulus packages, supply chain disruptions, and surging demand have forged an environment ripe for inflationary pressures. Another area of concern is the state of the U.S. stock market. Despite a robust recovery in 2023, The market sits precariously at the edge of potential instability. The substantial exposure of many individuals' retirement savings to the stock market adds to the anxiety. The significant losses incurred during the 2022 market sell-off, estimated at around $3 trillion, are a stark reminder of the potential repercussions of a downturn in major indexes like the S&P 500. Further complicating the picture is the role of debt in wealth creation. Using debt as a financial tool has historically benefited the affluent, allowing them to amass wealth. In contrast, the average person, adhering to conventional financial advice, often finds themselves disadvantaged. This disparity highlights the need for a reevaluation of traditional financial strategies. As these global and domestic factors converge, they paint a picture of a world teetering on the brink of a significant economic downturn. This situation calls for a critical shift in financial perspectives and strategies, moving towards more stable and tangible assets such as gold, silver, and Bitcoin is prudent in these uncertain times. The key to navigating this impending economic upheaval lies in being well-informed, adaptable, and prepared to adjust to an ever-evolving financial landscape. Charting a revolutionary investment strategy for 2024. In the investment world of 2024, there's a fresh wind blowing, and it's coming from Robert Kiyosaki. He's shaking things up, breaking away from the well-trodden path of value investing, the kind Warren Buffett made famous. Instead, Kiyosaki's charting his own course, focusing on slowly gathering a trove of assets that stand rigid in the face of economic storms and promise growth. He's not just talking stocks here. He's all about the shiny allure of gold and silver, the digital rush of Bitcoin, and the solid ground of real estate. Embracing gold and silver. His strategy gives prominence to gold and silver, placing them at the forefront of a robust investment portfolio. His preference for these precious metals is not unfounded, but deeply rooted in their historical resilience and intrinsic worth. He often reminisces about his initial venture into gold, a modest purchase of a gold coin for $50, which has since burgeoned in value. This example is more than a personal success story. It exemplifies gold's capability to act as a bulwark against the erosive forces of inflation and economic upheaval. Silver, too, mirrors this trend. Despite its price volatility, its upward trajectory in value reaffirms confidence in precious metals as viable long-term investment avenues. These metals serve as financial sanctuaries during periods of economic flux, mainly when traditional fiat currencies falter. Bitcoin, the digital asset of choice. In a marked deviation from conventional asset distribution, his portfolio incorporates a significant digital component, Bitcoin. Advocacy for Bitcoin stems from its unique attributes, a decentralized framework, and a limited supply cap, factors he believes will shield its value from inflationary pressures and economic downturns. Despite the inherent volatility associated with cryptocurrencies, he envisions Bitcoin as an indispensable asset in any investment portfolio, especially as a hedge against potential crashes in the stock and bond markets. The tangible appeal of real estate. Real estate stands as a critical component of this investment approach. It is perceived as a physical asset and a means for sustained income generation and long-term value appreciation. The investment strategy in real estate is calculated and future-oriented, aimed at generating a steady flow of income rather than short-term speculative gains. This approach highlights the strategic utilization of debt in real estate investments, leveraging it as a tool to enhance returns while minimizing personal financial exposure, a paradigm of tangible investments. At the core of his investment ethos is a pronounced preference for tangible, physical assets over ephemeral financial instruments like stocks or bonds. This inclination stems from his belief in the enduring value of assets with inherent worth, not merely representations on paper or digital constructs without tangible backing. This philosophy is a stark departure from mainstream investment strategies that predominantly favor paper assets. Kiyosaki's call to action and final thoughts. Robert Kiyosaki's clarion call for individual investors in 2024 centers around the pivotal themes of financial empowerment and proactive asset management. His advisory resonates with a sense of urgency, pushing investors to reevaluate and possibly recalibrate their financial strategies in anticipation of the transformative economic shifts. Empowerment through financial literacy. Central to this evolving narrative is the vital role of financial education. Understanding the broader economic landscape and the inner workings of various asset classes is now essential. This deep comprehension allows investors to make informed and astute decisions, especially critical as traditional financial norms face increasing scrutiny. Delving into economic trends, grasping market cycles, and recognizing the drivers of asset values equips investors with the necessary tools to navigate the complexities of today's financial environment deftly. Proactivity in asset management. The call is for active, thoughtful asset management, moving beyond the passive investment strategies of the past. The focus is on building a resilient, diverse portfolio with assets capable of thriving during economic downturns. The shift towards alternative assets such as gold, silver, and Bitcoin reflects a response to the limitations of portfolios overly reliant on stocks and bonds. These alternative assets are posited as offering stability and growth potential amidst the uncertainties of the current economic climate. This approach underscores the need to be agile and responsive, adapting investment strategies to align with changing economic realities. Navigating economic turbulence. Guidance for the everyday investor. This emerging strategy presents a roadmap for the everyday investor to navigate potential economic instability. It advocates caution against heavy reliance on traditional investment vehicles, which might be especially vulnerable in the face of impending economic shifts. Instead, it suggests looking towards assets like gold, silver, and Bitcoin, which could provide safer harbors, offering both protection and opportunities for growth. This guidance aims to realign the average investor's portfolio with the unfolding economic landscape. The crucial role of preparedness. Underlying these discussions strongly emphasizes the importance of being prepared for economic shifts. Investors are encouraged to diversify their portfolios and continuously learn about global economic trends and their impacts. This preparedness is about surviving in a fluctuating economy and positioning oneself to seize potential opportunities. A well-prepared investor can navigate economic downturns effectively and identify paths for growth and prosperity. Flexibility, the new investment mantra. In this evolving landscape, there's a recognition that only one investment strategy fits all. Each investor's unique strengths, weaknesses, and situational context must be considered. This reality brings to the fore the importance of flexibility and openness to various investment perspectives. As the economic environment continues to evolve, so must the strategies for protecting and enhancing wealth. Investors are encouraged to be adaptable, open to exploring new ideas, and ready to pivot their strategy in response to the shifting economic climate. In conclusion, 2024 marks a turning point in investment strategy, with a clear move towards adaptability, informed decision-making, and proactive asset management. This approach caters to the current economic climate. It prepares investors for the unforeseeable twists and turns of the financial future. As we conclude this insightful journey with Robert Kiyosaki's investment strategies for 2024, remember to engage with us. Hit that like button if you found this video valuable, and subscribe to stay updated on our latest content. Have thoughts or questions? Drop a comment below. We love hearing from you. Please share this video with friends and family who might benefit from this knowledge. Remember to turn on notifications to always take advantage of our future videos. Ready for more? Check out our next video for continued insights and tips. Thank you for watching, and let's navigate the future of investing together.